Hey guys, in this video I'm going to go over how to find the best entries for where you should buy coins and also where you can sell coins with one really simple way called the Fibonacci retracement and how it respects crypto very well. So the specific settings for what I'm going to share is the 0.618 and the 0.66. You would just tweak your Fibonacci tool by clicking on the Fibonacci tool and manually setting it yourself. You can do this by starting with this right here, going to Fibonacci retracement, and then clicking on the settings here and changing it. Now, this is one of what I think the highest levels of confluence. Confluence basically just means like one level of verification. So you wouldn't just use this on its own, but in most cases, like if you were a beginner and you just wanted an easy way to do things, this would be that for you. Someone actually asked me like where to buy BAT token, and I did it on a live stream, and it was really interesting because all I used for that was the CC, which is this exact setting that I'm sharing, right? And so I took this CC and I said, okay, right here's a good time to buy. And what did we do from there? We continue to pump. And then as you can see, actually this was the video, we were right here or something like that at the time. And I'm like, look, this is the CC for it. This is where you would target to buy. And from that, this has made a strong impulsive move upwards of 30% within a day. And so this is a really easy way to just get entries. It's also used for exits as well, and I just want to show BIT token because it worked so well with the CC that I think it's just beautiful. So if we look at BIT token, when this first was launched, man, my computer is laggy. So when this was launched, it respected the CC super well. It did not for everything. You can see here on this initial pump right here, from here to here, it didn't come back and touch this. And you can see from this high, this low to this high, we touched it, and this would have been an okay time to buy, but it did fall lower. From this low to this high up here, we came and touched the CC exactly before going back up. And then here, we did not. So what I think is really beautiful is that if you look on a higher term time frame, and we look at the CC from this aspect, oh my god, this lag is super annoying. I think my chart froze, but okay, here we go. So you use this both ways. So if you use it from a low to a high, that's when you use the CC to be like, okay, if price hits here, that's where I'm gonna buy. This was such a strong move that it looks like it hit the 0.5 maybe before going up, and this didn't even pan out. I'm gonna delete this. Actually, this wasn't super well respected, as you can see, in terms of like it constantly being in that area. So another way that I would use the CC is the other way around, right? So if I take the high from here to the exact low, you could say, okay, this is the resistance CC, right? Because we learned levels of support and resistance. So in the same way, if you pull a low to a high, the support would be the CC, right? But if you do from the high to the low, this is above current price, so you would expect this to be resistance. Now you might ask, okay, why wouldn't I start from this peak to here? You could. But that would be a lower term time frame. And then you could be like, okay, this would be a place to maybe sell, is if I took this current peak to the low, and if we were if we had not printed these candles yet, you might look at how price goes up into this and just sell here, but you would have had to rebuy like barely lower once you sold it before the next pump up. But in reality, the CC, even though it's a very strong level of confluence, it's not the only level of confluence you should use. So you shouldn't be just pulling from high to low always and just selling instantly right there. You look at other things, right? You look at like how price moved up. Did it move up with volume? Is there other levels of confluence that would tell you that it's going to go up or down? We can basically take a look at a lot of other coins and just see. Now realize that the higher term time frame that you do this on, the more powerful it is. So you can see here that we had a CC level on super, and because it was a higher term time frame, it rejected harder. And it rejected the first time it went in, and it rejected really hard, and then it came back in again, and it still rejected. Now, very likely the third time that it hits, it's going to blast through. So just be aware of that. The more times a level is touched, the higher chance it will break through. This is something that will always happen in crypto, right? Not always. This is something that has a really high probability to work, is if a level is touched many times, the chances of it breaking through is very high. So there's going to be a global CC, which is the max high to the max low, is the strongest level of CC there is. And so basically you would pull a Fibonacci retracement from the very high to the very low. And that's this one right here that you can see. Also, there's a daily support level there and a monthly right above it. You can definitely expect price to reject off of this in some form or fashion. If we're in a crazy bull market, you could probably expect it to maybe break through, fall back down, and then break through again. But if we're in a bear market, right, you would very likely see something like it touch and then completely reject. So many tokens do this on the higher term time frame. I always talk about OMG Token because it's such a good example of the global CC. So the global CC was right here. We touched it and rejected really hard. We touched it again and we rejected extremely hard by over 50% correction. And this just continues to happen throughout like any coin that you look at. So just remember, the higher term time frame that you pull this Fibonacci retracement, the stronger it is as a level of support or resistance. If it's resistance, it'd probably be a good time to sell. If it's support, it'd be probably a good time to buy. I hope that makes sense. But yeah, anyway, as a bonus, I just want to show Bytes, which is Alex Becker's coin. I do think that this is a fairly decent time to buy it right now. It's been in accumulation for a while. Just realize that this coin is heavily influenced by Alex Becker tweeting about his project, Neo Tokyo. There is news coming out on Neo Tokyo soon enough, and because he's going to launch it soon, so it might be a really good risk play to make. But anyway, you can see if we pull the low of this move to the high, we touch the CC before bouncing. It's a perfect touch, basically. And yeah, so anyway, this would have been a really good time to buy right here. It didn't touch right here. The move was too impulsive. And so that was the case. Anyway, thanks guys for watching. And of course, if you enjoy videos like these, please let me know. I don't really plan to do TA videos. There was some requests for it, but it looks like there's not too much care. I just wanted to share this one because I think it's one of the most powerful levels of confluence that there is in crypto. Again, you use it not alone. You need to combine it with other things to really make a decision, right? Because something like this powerful move up, if you see it consolidating like this, you would still end up buying a little bit. And I bet this was the 382 or the 0.5 or something like that, but you would still end up buying a little bit right here. This is probably the 0.5. Let's see. I'm going to add the 0.5 back. But in a very impulsive move upwards, it's probably going to touch the 382. Yeah, so if I add the 0.5 back, you can see we touched on the 0.5 and before we went up. And then in a even stronger type of move, the 382 or the 236 are touched before it continues upward. But usually in a higher term time frame, like 2 hours, 2-hour candles, you would expect the 382, not so much the 236. Anyway, thank you guys for watching.